lot of advisors and people listening would probably be familiar with the overall number, and that being that the Nifty 50 is up 150% in the past 5 years. But give us the story behind that number. How has India's economy and society really changed over the past 5 years?
Yeah, so look, that's a good question. The Nifty 50 has been the benchmark that most people look at when they're measuring India's success of its equity investing. However, there are 6,000 listed companies in India. Probably 1,000 which trade every day are liquid, investable, and some of those companies beyond the 50 have appreciated even further than this. India, over the last 20 years, I think when I lived in India in 2005, the Sensex, which is the top 30, was trading at about 5,000. Today it's closer to 80,000.
Oh,
so
wow.
16x over 20 years. We talk when we invest in equities about GDP growth. Is it really a measure of corporate earnings and equity returns? In India, I feel more than most countries in the world, the growth has been represented also in equity market returns. So GDP growth has averaged 6.5 to 7 over that period. Corporate earnings has averaged about 11% per annum, and equity market returns for an Aussie investor in Aussie dollar terms is around 12%. So, really that growth story has allowed investors to participate and benefit.
Wow.
And we're still only halfway done.
Well, you see
Only
that
halfway.
that is a question that often comes up whenever anything's run that hard. People start to think, have I missed the boat? Have I missed the opportunity? So you said it's only halfway done. So give us a sense of why you think it's only halfway done.
Well, you look at 2047 is 100 years of independence for India. There's a lot of information around India wanting to become a developed country by 2047. So when you do the maths on generally GDP per capita of about 15,000 US is accepted as heading into developed territory from developing. To achieve that, India's GDP needs to go today from 4 trillion US to 30 trillion in the next 22 years, 7.5x. So, whilst that sounds outrageous, it's about 10% nominal growth for the next 22 years, which I think is achievable. So that's what I mean. We've already come from less than $1 trillion to 4 trillion, and India is already the 4th largest economy in the world. So, now the next journey and where that growth story is going to play out is the catch up to the US and China.
Wow.
Yeah.
Well, I've just had a look here. US GDP in 2023 was about 48 trillion. So that would make India about the size of US today.
Yeah, correct. I think, when you look forward, the US and China are more mature.
Yeah.
So they're going to grow at a slower pace from a big base. India, if you go back in history, you've got these periods where US Industrial Revolution, then came Japan, and then came Korea, then came China. Now this next 20 years is really the incremental growth is largely going to be driven by India from a low base, and China also, because it's still growing faster than, say, the developed world.
So what are some of the, I guess, the key factors that are really supporting this, 10% growth that is going to hopefully play out over the next 20 years?
Demographics. I know that's a simple and easy to use word, but 1.5 billion people, average age 29. By the end of this decade, 25% of the people working will be Indian. So
Globally.
Globally.
What?
Yeah. So essentially, if you look at it, if the
No
average age is
way.
29, and we know that most of the Western world is over 40. So, when you kind of think about it, you'd go, well, it kind of makes sense that most of the people between 15 and 65 are going to be in India. And this was the same story in China. There's a thing we measure called dependency ratio. That means everyone who is under 15 or over 65 divided by everyone who's working age. So the lower your ratio, the better, because you have less dependence. China's ratio hit a low of around 35% in 2010 when their growth hit 12%. And then it's been, now growth has been slowing as the dependency ratio increases. India's still got 15 years to hit a bottom. Wow. So this is what is going to drive the growth, the demographics, essentially.
Wow. What do you expect the ratio to hit for India?
It'll be something similar because, when an economy reaches peak, typically 2/3 of your workforce, 2/3 of the people are going to be gainfully employed. And if you think about it, that's when wealth starts to rise. So GDP per capita, which in India is lagging, but we know what happened with China and it rocketed up. China chose manufacturing, so you can grow a little faster in a manufacturing space. India went down the retailing space and services. Now that will kind of morph into a more diverse economy between manufacturing and services.
Wow.